It's your first real free £100 that hasn't been allocated to bills or other spending, and you've just found out about investing. This is probably going to be one of the most exciting points in your investment journey as you think about all the potential there is coming your way. However, there are some major pitfalls. I don't want you to fall into any of these, so in this video I'm going to go through how I would think about investing £100 with some considerations for your own position in life. Warning, it might not be as fun as you expect. Hello and welcome back to the Dividend Experiment, the channel that helps you build a portfolio that pays your bills. The content that we discuss is intended for information and educational purposes only, and should not be considered investment advice or investment recommendation. Okay, so you have £100 and you want to invest it. Before you do that, there are some things to consider. In my metronome portfolio model, there are 4 legs, and these are so important they need to be accounted for before you even start investing. If you're not sure what this is, then I made a video about it, which I'll link in the card up in the top right hand corner now. These are what I mean about the 4 legs: emergency fund, income, knowledge, and emotional balance. These are super important. If any of these legs are not strong or fundamentally supportive, your entire investment portfolio can come crashing down. This means that they really need to be addressed before you can start with that £100, or you can end up losing a chunk of it inadvertently. Let's start with the emergency fund. Before you invest, it's essential to have an emergency fund. This fund provides a safety net and ensures that you have the money readily available in case of unexpected events. It prevents the need to withdraw from your investments and helps maintain the compounding and growth of your portfolio. Additionally, having a significant amount in your bank account gives you the confidence to take bigger risks in life, career choices, and investing. Whether you want to relocate, switch careers, or start a business, having savings provides a cushion and support during transitional periods. Determining the size of your emergency fund depends on how long you think it would take to find a comparable job or overcome a financial setback. Typically, it's recommended to have 3 to 6 months worth of expenses, but you should consider your specific circumstances. If you're confident in finding another job quickly, keeping 2 months worth of expenses might be sufficient. However, if job opportunities are scarce or your salary is relatively high, you might want a larger emergency fund to sustain you during the challenging times. By prioritizing income and building an emergency fund, you'll be in a better position to contribute more of your income to investments. Imagine you invest the £100 and then the market has a downturn and you find out you need to pay for something. That would mean you have to sell your investment at a temporary loss. Now, we have some good options in the UK for emergency funds right now, as rates are pretty good from banks. Here are some options that I would consider as potential places for an emergency fund. An easy access bank account like CHIP. At the time of making this video, it offers 4.84% on savings, and you can withdraw almost instantly with no messing about. That's pretty good criteria for an emergency fund. Trading 212 offers a higher rate on cash right now than even that, with its current rate at 5.2%, and it pays out interest daily, which is nice too. There are multiple other currencies available, so it's probably going to be a decent place for you if you're from Europe, unlike the other options that I'll mention here. And on top of that, I asked Trading 212 if they could give me a unique code that you guys can simply type into the promo code section, capital at risk. So if you've opened a new account recently or planning to open an account, then here it is, DivXP or DIVEXP, short for the Dividend Experiment. So you have 10 days from opening your account to type this in and receive shares worth up to £100. I also get something as this is my custom code, so this helps you support the channel too. If you do use it, thank you for your support, and thanks to Trading 212 for sponsoring this video. For me, I don't use Trading 212 as an emergency fund, despite its versatility here, and that's only because I know that if it's sat in my brokerage account, then I'll not be able to resist investing in my emergency fund, which is obviously not ideal. It's a good option and a really good rate of interest though. Then one further option for an emergency fund is premium bonds. This is a fun option as there's months where you'll win and then months where you don't get anything, but hopefully the rate that it averages out at is reasonable. Premium bonds offer a prize fund rate of 4.4% annually, with the odds of winning at 21,000 to 1 per £1 bond number. All prizes are tax-free, and both the rate and odds can vary. That tax-free rate on prizes is definitely an attractive feature in favour of premium bonds. I would say that a set rate of interest is probably more beneficial at the lower rates of deposits compared to the prizes of premium bonds, but it's a personal decision, and sometimes the fun of the chance of winning big can sway people towards premium bonds. Overall, it depends on the circumstances really, but all these 3 are a good choice from my perspective. But back to the £100. If you've not got an emergency fund, and you're not going to like it right now, as it's boring compared to investing it straight away, but I would deposit it towards my emergency fund. I do think it's a decision that pays off down the line though, and it's why I consider it so important. Now let's say you got your emergency fund sorted. There's another leg of the metronome that you need to look into before investing, and that's income. When you're early on in the investing journey, increasing your income is much more likely to have a greater impact than any returns on investment you'll get from an early portfolio. Let me give you a visual example. An investor, and let's call him Peter, he makes £25,000 a year and can save, let's say, £100 a month. That means in a year he's saved £1,200. He has this just as cash and decides to invest it the following year. He invests this £1,200 and gets a 20% return on his investment. 20% is very high for context. It's also stated as being what Warren Buffett has achieved on average across the span of his career. Now I'm using 20% here to really emphasize the point I want to make. So Peter has invested £1,200 and achieved 20% return, so at the end of the second year his total is now £1,440. He has added £240 in 1 year to his net worth. Now imagine he gets a raise at his company to £28,000 a year. That's not an insane jump in salary in his field, and he keeps his lifestyle costs the same and will ignore taxes just to keep the maths easy to follow. So where he was saving £100 a month on £25,000 a year, on £28,000 a year, that's an extra £3,000 a year, or £250 a month added to his net worth. Even if he could achieve record levels of investing return, trying to improve income and then savings rate is probably going to be a better endeavour. Now, thinking back to the £100 you want to invest, is there any possible way to use that to increase your current salary? The ROI of increasing your salary in the early days is likely to far outweigh the impact of the investment. There is an inflection point where this changes, but that's a story for another video with more calculations involved, and we have other things to cover in this video. Now, one other thing I would think about with that £100 and before investing is knowledge. Are you confident in your plans? Are you comfortable with understanding what you're investing in? One thing I see a lot is that people find they have £100 and they think as it's spare, it means it makes sense to invest. The problem is that simply investing is not enough. You need a plan for what you want to get out of investing, what can help you get there, and what it is exactly that you're investing in. Now you can find a lot of this information for free on YouTube. That's really the blessing of the modern age, or how freely available information is out there. But this is a double-edged sword, as there is also a lot of waffle, and freely available bad knowledge that can lead people astray too. I personally think for some people, a well-structured syllabus that goes through the important parts of investing can be worth paying for if it helps you sort the wheat from the chaff and speed learning up. Nothing I would recommend out there at the moment, as a lot of these courses that people make seem very low on detail. I myself am working on something that I think a lot of you will like though. If you want to be the first to hear about this and get a discount on any future course that I make, then there's always the option to sign up to the emails in the description and pinned comment below. I do realistically think there is a lot to learn on YouTube for free though. So to answer the question, where would I invest £100 right now? Maybe I wouldn't invest it at all. I think having these things locked down and ready is more important. If you like this video and want to see where I'd invest £5,000 right now, then I'll discuss different investment ideas as well as diversification and portfolio building, then give this video a like or a comment so that I know it's something that you want to see. If you liked this video, and if you made it this far, I'm guessing you probably did, then I have some good news for you. I'm giving away my PDF guide to the 10 dividend investing commandments, or the criteria that I use to pick dividend paying stocks, and I'm giving it away to you for free. All you need to do is submit your email in the link below and it'll get delivered to your inbox straight away. Again, that's for free. But that's not the only benefit of joining the email. You also get updates on the almost daily dividend portfolio, interesting stock ideas or news, and special deals and free stuff that I can share with you. Thanks for watching, and I hope to see you on the next video. See you!